This episode is brought to you by Tradu. Tradu is a new trading and investing platform built for people who take markets seriously. Whether you trade daily or invest for the long term, Tradu gives you access to tight spreads, institutional grade pricing, and tools like Analyst AI, so you can cut through the noise and act with confidence. Find out more at tradu.com. 65% of retail CFD accounts lose money. Your capital is at risk.
Welcome to the UK Investor Magazine podcast, the latest on shares, markets and investments, now available on your Amazon Alexa.
Hello and welcome to the UK Investor Magazine podcast, now also available on the UK Investor Magazine mobile app. For today's podcast, we're welcoming back the CEO of Tradu. For this podcast, we're going to be looking at lowering fees within the industry and lowering fees for investors and traders and exploring the rise of zero commission trading. And to do that, as I say, we're very kindly joined once more by Tradu CEO, Brendan Callan. Brendan, thank you very much for being on the podcast today.
Yeah, thank you, Jonathan. Good to be back with you.
So very recently we had an insightful conversation around AI, and I do recommend that anybody who hasn't caught that particular conversation, do go back and check on your podcast player and pick that up, because that's particularly insightful. And Brendan did provide some really good explanations of how Tradu are deploying AI for their investors and traders through their platform. So do go and check that out. But as I say, this particular podcast is going to be looking at the fee structure within the industry at the moment and how zero commissions are impacting traders and investors and the considerations of zero commissions. But before we get into it, Brendan, for people that didn't catch the first podcast, please could you give us an introduction, first of all, to yourself as well as Tradu, please?
Yep, of course. Brendan Callan. I'm the CEO of Tradu, have been for the past 8 years. I got 25 years in the market. I'm an American, as my accent probably gives away, but I'm based in London and have been there for 15 years. Tradu is a multi-asset brokerage, also again headquartered in London. We offer stock trading, spread betting, and we have a wallet in the app for convenience. You can kind of tap to pay for your coffee, but you can also utilize the wallet to fund and withdraw from the trading accounts. And yeah, excited to be back here again with you today, Jonathan.
So, Brendan, low commissions, commission-free trading within the industry. I'd like to start to get your perspective on how it's actually changed the industry, maybe from a perspective of how it's attracting different types of investors, maybe sparking different types of trading behavior. It'd be really good if we could set the scene to start with your perspective on that, please.
Yeah, so to give, credit where due, I suppose, Robinhood kind of pioneered commission-free trading in the United States. And, kind of a data point that helps contextualize this is at this point, 60% of US households own stocks. They're invested in the stock market. In the UK, that number is only about 11%. That is a drastic difference. And I do credit zero commission trading to that on-ramp, to lowering the hurdle to get over and start trading equities and investing in equities. Now, it does, conjure up more active trading and in and out, maybe less buy and hold than is optimal for people's portfolios, but it's gotten the American household more heavily indexed to the stock market, which has boded well for them. Obviously, the U.S. indices are doing fantastically well, and the market's been on an upswing for quite a while now. So it's had that very positive impact.
Thank you. So Brendan, like many listeners to this podcast, probably have various different trading accounts, some commission-free, some you may pay £10 a trade on physical equities. But there's always this question, nothing in this world is free. So I'd like to drill down now into what commission-free and zero commission actually means. And if you could provide your insights into maybe charges that are behind the scenes in terms of spreads and hidden costs, please.
Yeah, so it means slightly different in the US than it does in the UK and Europe, and payment for order flow is the big factor there. So that's how Robinhood was able to charge, or was able to get away without charging commissions. They were receiving payment for order flow from the HFTs that they were sending the trades through. That's not allowable in the UK and in Europe. So there are other revenue streams. So for customers that trade on margin, there's margin fees that apply. There's idle account fees. Some brokers have monthly platform fees. They might be idle account fees. If you're not trading, you get charged, or they might just be access fees altogether. The spread is a big one. So in our world of over-the-counter trading, our clients are very well aware of the spread. Our platforms are all geared to very specifically highlight what the spread is, because that is the transaction cost. CFDs and spread bets don't come with a commission. There are spreads in the equity markets as well, obviously, and in the crypto markets as well. And those client bases don't seem to be as aware that that's the case. So they just read the headline of low or zero commission and think if it's zero commission, they're trading without any costs at all. But if you open and close a trade without any movement in the price at all, you're down. You're down an amount. And if there was no commission on the trade, that amount would have been the spread that you paid in crossing the buy-sell pricing. Firms will do FX conversion fees. So if you're a UK investor and you want to buy Tesla or Nvidia, that's obviously traded in US dollars. So they'll do a conversion of your pounds into dollars to make the purchase of Tesla or Nvidia for you, and they'll mark up that fee, the FX transaction, and make money that way. I don't want to paint it as all kind of evil and hidden. Grocery stores fairly famously sell milk at a loss to get you in the store and trade the other products, or buy, the candy bars and the soda. So there's an element of that as well. Right now, Tradu charges £1 for stock trades. We are moving to a zero commission model earlier in the new year. We're not hiding any additional spreads or any additional markup into the spread or, absurd FX fees. But it is with kind of that expectation of we'll have a loss leader of, US shares, but get customers in the door to trade the other instruments.
Indeed. So I'd like to talk about transparency. We've mentioned their hidden charges to some extent, and I think we've got to look at whether those charges are actually hidden as such and how transparent brokers are. And I think it would be good, Brendan, if you could provide maybe a comparison between the US and the UK, the two markets that we've touched on so far, and then also what Tradu's doing. How are you making your charges transparent?
Yeah, so there was really no transparency out of the US in payment for order flows. They weren't being required to share with their clients. With hidden fees, whether you're buying a plane ticket or renting a car, and certainly when you're trading, no one wants to get smacked with a fee that they weren't expecting. We go a step further than transparency here. We have a tool called Spread Tracker, and we monitor the spreads of our UK-based, biggest competitors. This is accessible to anyone that wants to visit our website. This isn't something that we put behind a paywall or only if you have an account. We show the world how often we are the tightest spread compared to our other competitors, and it will show the columns are the instruments like gold or euro dollar or oil or S&P 500 or whatever, and the rows are days of the week, and it will show how often Tradu was the tightest spread across that competitor base each day of the week across each of these products. I'm proud to say we're tightest often 100% of the time, but certainly in the 90 percentiles. And if we're not the tightest over 2 week or so stretch, and we get a 95 on that S&P 500 as an example, it doesn't mean one of the competitors beat us 5% of the time. It means that a mix of all of the competitors beat us 5% of the time. So we want to take that bit of energy or monitoring off of our clients' worry lists. Like our clients want to worry about what position they're going to take next and market risk and their market analysis. They don't want to have to constantly research and re-research, am I at the right broker? Because what you pay in spread is certainly important, but it's almost more important what you could be paying. In other words, the relative element of this. So if I'm paying 0.6 spread on euro dollar, that's a good spread. But if I could be getting 0.4, 0.5 somewhere else, I would want to know that. And that's what Spread Tracker does for our customers. It just gives them that comfort and assurity of, listen, we do that research for you. Rest assured that we are making sure we're going to be the tightest spread most of the time and the broker fee to be with, and you focus your energy and efforts on your trading and market analytics, and not are you still with the right firm every quarter or every month.
We're just going to take a brief break from the podcast to bring you a message from our sponsors. Keeping up with the markets takes time, and if you're trading on your own, that can feel like a second job. That's where Tradu helps. It's a multi-asset trading platform that gives you free access to Analyst AI, your always-on research assistant. Analyst AI flags market shifts, trends, and sentiment, so you can focus on decisions, not digging. As one user put it, I used to spend 2 hours a day on research. Now I spend 2 minutes. And if you want to go deeper, Tradu also offers access to institutional research from Jefferies Financial Group. With smarter tools, institutional pricing, and 4.5% interest on unused funds, Tradu is built to give active traders more control and more clarity. Visit tradu.com to get started. Interest subject to a minimum balance. Terms and conditions apply. 65% of retail CFD accounts lose money. Your capital is at risk. Thank you for listening to this message from our sponsors, Tradu. And now back to the podcast. So going back, Brendan, to zero commission trading, the benefits are clear. It's brought a lot more people into the market. You know, somebody 10 years ago, for example, that wanted to invest £50 or £100 into a stock or might have felt locked out from the financial markets if they had to pay £10 commission. Now, by doing it in zero commissions, they're not eating up on a percentage basis a lot of their investments on commissions. But I'd like to look at the other side of it and the drawbacks of zero commission trading, because there is an element to gamification of trading within zero commissions. Maybe it's bringing people that aren't as experienced into the market. What are you doing and what do you feel the industry should do in terms of protecting the public which are looking at investing maybe smaller amounts through zero commission platforms?
Tradu doesn't do gamification. It's a credo of ours. Like this isn't a game to us. You will never hear a kazoo noise or see a confetti gif when you've placed your 10th trade. That's not what we're about. It's not what we put any resources on. There's a lot of copy trading functionality in platforms now that often painstakingly ends up being scenarios where a guy leveraged his account, was lucky and got it right. So he comes to the top of the leaderboard and all the clients, pile on and copy him just in time for him to blow up the next day. Like it's gut wrenching stuff. And that's not the business Tradu is in, nor will ever be. We're not here to gamify, this business. We're not here to capture your attention or, to manipulatively convince you to spend more time on the platform or place more trades than you otherwise would have. Like we're here to give our customers access to the market, give them extremely competitive pricing and professional grade tools that allow them to most effectively deploy the risk capital. We're not here to gamify very specifically. Another version, not just the copy trading and the earning awards or medals for the number of trades and stuff like that. But a part of the gamification strategy among other brokers seems to be kind of tricking you into trading their higher margin products. So they may do share trading at zero commission or low commission, and then they'll kind of entice you to put some leverage on that. And when you do, they don't make it apparently obvious that you're not trading the asset anymore. You're now trading a CFD on that asset or something that allows them to earn a little bit more margin on the trade. So there's kind of this trickery involved where they're getting tons of clients on board with these zero commission marketing campaigns, in that they're gamifying them into the higher margin products, whether the margin is earned through spread or margining fees and rollovers and things like that. But not something we're into, not something we're going to be into. Like I said, we're here to provide access to the markets at great rates and provide great tools. And then, customers, we hope, use those tools to their advantage.
Indeed. And of course, one of those tools is the Analyst AI tool. And anybody wants to know a little bit more about that, I would recommend going back to the previous podcast that we kindly recorded with Brendan for more information there. I'd like to take it back and look at the business case and the business implications of zero commission trading now, Brendan, because when I entered the industry about 15 years ago, I was an advisory stockbroker. We were charging clients 1% to execute trades. So you obviously see the business model there. There was an advice element to it. But we fast forward 15 years to this point in time, investors can trade for free. So it does beg the question, how are brokers making money at this point in time? And what does it actually mean for the level of service that investors and traders are getting from their brokerage?
Good question. So listen, competitive forces are good for the consumer, right? The fact that commissions and transaction costs are down is great. It's great for you and me as consumers of these services, and I'm glad to see it. The good news is the same competitive forces have had their effect at the institutional level. So our fees are down as well. And we, a big part of it is just kind of passing that on to our customers. There are other revenue sources, and certainly if you're signing up with a zero commission broker, you're going to want to get an understanding of what those other revenue sources are. Some charge platform fees, like I said earlier. Some will charge idle account fees. There's margin fees if you apply margin on your account or any of your positions. These FX transaction fees can get marked up and kind of hidden in the fine print. We charge 25 bips, so 0.25% on FX transaction fees. I know a lot of our competitors charge 3, 4, or more times that number. So if you are going with a zero commission broker, I would check there. I would immediately ask what your FX conversion fees are, because a lot of them seem to be trying to hide it there. I mentioned earlier, we're going to a zero commission model for U.S. shares earlier in the new year. And the reason it will happen then is because we're doing some updating to our technology and some of our clearers with better economic agreements between us that will allow us to do it, frankly. And we got some work to do there just to kind of build out interconnectivity and the like. So we're excited to be, in the midst of, zero commission brokerage. It doesn't mean I want customers to call me out on this or to confirm this. Like, it doesn't mean we're going to be sneaking in fees in other areas. That's not our intent. It is that kind of milk at the grocery store. Like, all right, we're willing to do this particular instrument as a loss leader to bring customers in the door, and then we'll try to make money if they trade options, charge commissions there. If they put any leverage on their account, there's margining fees there and things like that. So it's not all bad. There's an honest way of broking in financial services. You just have to tell clients and be very transparent about what these fees are. We will do that. We certainly know that a lot of our competitors don't, or they kind of hide it in the fine print, and it's difficult to find these fees. If you're a client or a trader looking for a new broker or looking to switch from an existing one, these are the rocks to look under. Check what the conversion fee is. Check what their margining fee is. Get comfortable with the platform and know that you're not going to be tricked into their higher margin instruments off of what you originally intended to trade.
Indeed, I know some of the FX fees on platforms that I use are particularly punchy, and it's quite clear that's where they're making their money. Some brokers, Brendan, use a subscription model. Is that something that Tradu would consider?
We don't do it now. I don't. I can say I don't have plans for it in the the foreseeable horizon. It becomes kind of like a gym membership business model at that point, where you want to go out and sign up as many clients as possible that pay the monthly fee but don't ever use the service, which is kind of that's what gym memberships do. They get as many members paying their fee as possible, but want as few people utilizing that service as possible. So I just kind of philosophically, I'm not hugely keen on that. We like to kind of charge people as and when they use our services. I think what we may consider, we have tiers of services. So if you have $100,000 balance, you get access to additional tools and analytics and things like that. I think there's some logic in offering customers another way of getting to that service level as well. So if they don't have $100,000 to put in the account, a monthly subscription could be another way of saying, okay, well, if you want to pay whatever it may be, £20 a month, you can get it that way. So I'm open-minded to concepts and fee structures along those lines. But, the short answer to the question is it's not what we're doing now. We don't have time as part of the plan in the foreseeable future. I'm not, philosophically totally against subscription plans. It's just a different animal, frankly.
Thank you. So, Brendan, you've been very kind today to provide listeners with a deep insight into the industry of zero commission trading. So, to finish off now, a bit of an opportunity for a sales pitch here. And I'm going to ask you, can you give me 3 reasons, please, why investors and traders should choose Tradu for their trading, please?
Yeah, so I mentioned this earlier. Our tagline is trade with an institutional edge. So we're kind of using the skeletal structure, the technology, the code, the source code of an over-the-counter CFD spread bet platform, and we're adding on to that a bunch of other tradable assets and instruments as well. So when we say we allow you to trade with an institutional edge, it means we're allowing you access to the tradable markets as an institution would get them. We're allowing it at institutional grade pricing. We talked about spreads extensively. We, in fact, offer our customers better than institutional grade spreads on the spread bet platform. We offer institutional grade tools. So we covered Analyst AI a little bit here and in our previous podcast together. It genuinely is a tool that that was kind of built with institutional, even hedge fund and HFT or mutual fund audience in mind. We want to get our customers that level of research and analytics, and then institutional grade insights. So we are owned by Jefferies Financial Group. And because of that, we get our customers, thanks to that, we get our customers access to Jefferies research, which is among the highest rated available. It's research that otherwise you would have to be a big investment banking client of Jefferies to get access to. Tradu customers get access to it by having a Tradu account. 5,000 balance or more, our customers get access to top rated research from Jefferies directly each week. So I could add to that. We offer great integration with TradingView and free subscription to their higher, I think they call it Trading Premium, their higher cost monthly services. And we offer great customer support. Our hold times are sub 1 minute, far sub 1 minute. We've got a heavily trained staff. And I think now that's notable because particularly with crypto exchanges and big brokers and even the wallet solutions, you're not going to get a hold of a human being to save your life. We still have gold standard customer support. So anyway, that's my, I suppose, slightly longer sales pitch than what maybe you were asking for, but all good reasons to check us out.
Yeah, absolutely fine. I think that human touch is important because there's nothing more frustrating if you're trying to put a trade through and it's not working for whatever reason, and you can't actually speak to a human being.
Yeah.
So having that human touch, that human in the loop for all the technology that's available to investors in this day and age, that's still very important. So that's a very interesting point that you make there, Brendan. And a note to listeners, do check out the description to this podcast because there'll be a link through to Tradu's website where you'll be able to go and test out the platform for yourself and use some of the tools that Brendan has kindly introduced to you there. So, Brendan, thank you very much for being on the podcast today.
Thank you, Jonathan.
And thank you very much to everyone for listening. Thank you.
We hope you enjoyed listening to the UK Investor Magazine podcast. Please do share the podcast, and we really value any reviews and comments you leave us in your chosen podcast player. The views presented by the hosts and guests of the UK Investor Magazine podcast are in no way investment advice, and please remember all investment involves risk.